Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Philip Newman, Managing Director at Metals Focus, for an update on how election 2020 and COVID-19 vaccination news has impacted gold and the precious metals market. Philip, it's great to see you again. Welcome back to Trade Talks.
Yeah, good to be here. Thanks for having me.
And since we spoke last in October, asset classes were largely in a holding pattern, sold off the week before the election and took off after it looked like a Biden win in split Senate and House. How did gold perform during that time?
Well, I think you sort of called it right there as well. I mean, we certainly saw when we were thinking that Biden had won that, I think, gold did relatively well. Obviously, then it's sort of expectations that we will see in Q1 a sizable fiscal stimulus package being enacted. And that's clearly, I think, beneficial for gold, especially for those investors that are thinking about, gold and other precious metals as being sort of a hedge against inflation.
Now, gold was under pressure since the positive COVID-19 vaccine news out of Pfizer and recovered slightly. Why would it be down on that kind of news, and why did it see that rebound?
Well, I think when we saw that news come out, that wave of optimism that should be positive for economic growth, or more positive for economic growth in 2021, that maybe we'll see growth return more quickly, which will be beneficial for equities. And in turn, that would therefore potentially be negative for gold. You're right in terms of we saw gold coming down to around the 1860 level. It seems to have held there at least for today. And I think the reason it's held is that investors are still well disposed towards gold, still positive towards the yellow metal. And I think for those investors that feel that they missed the boat when gold was over 1900, they're still feeling positive. And therefore, this is, I think, a very strong opportunity to come in and buy. And I think it's those purchases that have helped gold to stabilize at these levels.
Tell us how the consumer or the jewelry market is impacting gold. Why is there a divergence in the data?
Well, I think what you're seeing is when we think about some of the key markets, and let's say focus on India, which is the second largest consumer of gold behind China. The market has suffered from an extended and very widespread lockdown. We're now seeing some of those restrictions being eased. And we're certainly now seeing consumers starting to return to the market, but they're coming out in the market. It's an important time for India, for the gold market. You're seeing now the festive season, the wedding season. So this should really be the height of gold demand, and they're certainly returning, but they're being faced with exceptionally high prices in rupee terms. And of course, we have to understand the hit to their disposable incomes as well. So I think that's why we are seeing this marked divergence between professional gold investment on the one hand, which has been incredibly robust, and physical demand for jewelry, which has been exceptionally weak, only now starting to come back, and gradually so.
What's your longer term outlook? Is it almost like equities where so much is predicated on what the election outcome will eventually be, terms of vaccination approval and getting it into the population?
Well, I think what we will see, what we can see really, is as we get perhaps more news of other vaccines and how they're progressing, we could see that wave of optimism continue. That could be pro equities, negative for gold in the short run. But we think that investors, once that sense of euphoria has passed, they will take stock of the situation. They'll realize really that the economic outlook is still unfortunately uncertain, and that the fiscal stimulus that we expect, combined with the fact that monetary policy will still remain loose for an extended period of time, that should still favor both the safe haven and the sort of anti-inflationary purchase of precious metals, and mainly gold. And therefore, we think that gold will certainly stay high for longer.
And Philip, to wrap here, how has the broader precious metals market fared? Any standouts there?
And I think that's a good question. I think, well, if you think of, for example, silver, at the moment, that is certainly seen its fortunes tied very heavily and very closely to gold. And what we do see is that when gold performs well to the upside, because silver is a far smaller market, it tends to outperform gold. And I think we could certainly see that going forward for next year. So I think we could see the gold silver ratio coming down and silver doing quite nicely. I think for the likes of platinum, again, that should also move higher. We don't think that the discount to gold will narrow, but we think that as gold strengthens, and platinum should also do relatively well. And then finally for palladium, which I think has been a very strong performer generally speaking. Again, the market has been in a deficit. We think that deficit will continue next year, smaller than we've seen for a few years. But the fact that we're not seeing above ground stocks rising, they're still continuing to fall. The market should remain relatively tight. And so again, that should support prices as well in 2021.
All right, Philip, thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.